Hey, Ron Janish here. Today is the 12th of June in the year 2017, and today I received my copy of a magazine that's coming out with an article that I wrote in it, Quick Profits with Andrews Geometry. I'll show you that in a moment. Right now, I want to focus on a couple of different charts, one of which is this hourly chart here in the VIX. I normally do not trade the VIX. But when price was down in this area here, the Andrews techniques were just telling me, hey, this is a way to go. And as you can see, the average price we bought in was 12.45, and that would have been right around here, around this value here. And so price did go a little lower and went a little higher afterwards, and now is sitting up here. So remember, for weeks we've been talking about the market getting ready to go down for the summer. And it finally did its thing that would indicate that this is very, very likely last Friday. So this is what we have right now in the VIX. Let's look at the Dow chart. This is the mini Dow Jones chart, and so we'd be looking for this one to go down, and this one, 21198, would have been, where is that? There we go. Would have been right around over here, right around this value here. So this is where it went up to Friday, just splurged up a little bit and then came down, and this is where we are. And right now, we think that there's a really good chance that in the fall, you'll have a wonderful opportunity to do some shopping in the markets. Okay, and if you look at stocks like Amazon and Apple and all those guys, you'll see that they've gone down quite a bit in the last couple of days. Let's switch quickly over to an article that I wrote that was just published. Let's take a look. See if I can find this thing. Here we go. There we go. Let's see if I can flip this so that it's the whole page it's focusing on, not just part of the page. Or here we go. That's even better. Just focus on this section here. Okay, and this is an article called Quick Profits with Andrews Geometry. I'll give you the rundown on it real easy. What it is it's an article that's published in Traders World magazine. Okay, just came out today. And basically what it says is that, Dr. Andrews taught that prices make it to the median line 80% of the time. And we've done some testing out of this theory. We, just for grins, tested it out in the Forex markets. This is a no leverage test that we ran. And the results were really kind of interesting. And you can see the percentage winners, percentage losers, and all these other statistics that came out of that particular test run. Okay, let's move on to what the article focused on. Well, basically, remember Andrews said that 80% of the time prices make it to the median line. Okay, well, we can see that if we draw our median line here, prices made it there and then later on didn't. And after they don't, well, they often will go rather strongly the other way. Okay. And here you have a nice example of had you drawn your median line here, you would have seen that prices didn't make it to the median line, and you could have used something called an SH line. Now, SH line is a beautiful line called a sliding parallel, and if you draw your median line, which is the line coming down here, this red line here, okay, and prices will often briefly go outside this parallel line. Andrews called them the MLH lines. And these are lines that are parallel to the median line, drawn from the extremes. And so what would happen is prices would pop outside and then come back inside, and down we go. Okay. And interestingly enough, this would happen to coincide with prices not making it to the median line. And then you have a really nice downside move. Here's another example. We see that prices don't make it to the median line. And lo and behold, boom, there's your SH line. By the way, it's the same chart as number 2. It's just here I wanted to show you that prices did not make it to the median line, all right, before they did this little dump here. Okay, and so here was your SH line. And so anyway, this article tells you it kind of nicely, and then we also have a video for course members that comes along with this. And so this shows you here. Let's take a look, see what example we have here. Here we go. We see that prices don't make it to the median line, right there, right on top here. And then we see if we draw our high, low, high median line, which would go to the downside, we see that prices pounce past the H and give us the opportunity to form an SH line, and then down we go. See, isn't that kind of neat? Okay, once again, they don't make it to the ML, all right, and they'll break the H line, make it past there, and then away we go. It doesn't happen 100% of the time, but it's really worth watching for. Okay, well, you know, I don't know anybody else who shows you this level of detail. So here, for example, is a soybean meal chart, and if you draw your median line, which would be your low, high, low here, you'd see that prices didn't make it up to the median line, and so they broke out the H and then came back inside. And so here you have your sliding parallel point, right? And then down she comes. And you know, just to show you that I really do eat my own cooking, if you look down here, you'll see unrealized profit of a good amount right in here. And that's your right here. And that's the trade from this thing here that we're talking about. Okay, so this is me actually eating my own pudding. My own pudding, yeah, okay, pudding, cooking, whatever. And that's what's going on. Anyway, I teach the Andrews course, and that comes with a nice big manual and just lots and lots of videos that show you in a reasonably easy way how this is done and how this works. And so I thank you for your time, and see you next time.